Hey guys, and welcome back to the channel. Today we're going to be talking about Microsoft, which is sitting near its 52-week low. And for long-term investors, this is exactly the kind of moment you wait for. Not because the business is struggling, but in fact the fundamentals are stronger than ever. But also because sentiment has temporarily disconnected from reality. When a company of Microsoft's scale, profitability, strategic positioning experiences a pullback with any deterioration in performance, that is when disciplined investors step in. These moments don't appear often, and when they do, they tend to reward patience. So, before we get into it, this is not financial advice, but please do your own research. But let's jump into it. So, Microsoft trades at around $390 with a market cap of roughly $2.9 trillion. It's one of the most diversified and resilient businesses on the planet, and the company operates across major segments. We've got the productivity and business processes like Microsoft 365, Teams, LinkedIn. You've got the cloud services like Azure, server products, AI infrastructure, and then you've got personalized computing, or like, for example, gaming, where you've got Windows, Xbox, service, search, advertising. This diversification matters because it means Microsoft isn't dependent on one product, or even one trend, for example. It has multiple revenue streams, each with strong recurring components, and each benefiting from a broader shift towards cloud, AI, and digital transformation. And year to date, we are down by 20%, which is quite surprising for the terms of Microsoft, when normally each year they do very well. And because they're near the 52 weeks lows, everyone is talking about them. So what does Microsoft do? Well, Microsoft isn't just a software company anymore. It's a backbone of global enterprise computing. They've got Azure, which is the cloud platform powering AI, enterprise workloads, cybersecurity, database, and global infrastructure. You've got Microsoft 365 and Teams, which is a dominant productivity suite used by hundreds of millions of workers every day. You've got GitHub, Xbox and gaming. You've also got the Copilot AI infrastructure, which is the Microsoft AI layer across every product, powered by its own models and massive data center build-out. Together, these create a flywheel developers build on, like GitHub deployed to Azure, enterprises use Microsoft 365, AI enhances everything, recurring revenue grows, margins expand, cash flow compounds, and of course, Microsoft makes its money. And of course, due to that, it's considered one of the strongest compounders in history. So, what is Azure? What is the global cloud platform? Well, it holds 20% of the global cloud market, second only to AWS. But what matters isn't just the market share, it's the trajectory. Azure is growing faster than AWS. It's becoming the default platform for enterprise AI. And every time a company adopts AI, trains a model, deploys an agent, or integrates Copilot, Azure consumption increases. Azure is also deeply integrated with Microsoft 365, GitHub, Windows Server, and the entire Copilot stack. This creates switching costs that are almost impossible for competitors to overcome. But why does this matter for investors? Well, cloud is Microsoft's highest margin segment. Azure is the biggest driver of long-term valuation. The growth leads to multiple expansion because investors price Microsoft as an AI plus cloud hyperscaler. And AI boom directly increases Azure revenue. Every model needs to compute storage. It also needs to get capacity. And it's the engine behind Microsoft's next decade of growth. What is also Microsoft 365 in Teams? Well, Microsoft 365 has 446 million paid seats and dominates enterprise productivity. Teams also has 320 million monthly active users, and the ecosystem is one of the most valuable assets in global technology. It's also powerful due to recurring revenue with a subscription base extremely predictable. It's got the enterprises that rarely switch productivity suits, the deep integration with Outlook, Word, Excel, PowerPoint, and so on, and the Copilot modularization. So the AI features laid on top of the existing apps increase average revenue per user. Now, Microsoft 365 is a cash machine that funds Azure, AI, and long-term investment. But why does this matter? Because this segment provides stability. Even in recessions, companies don't cancel the 365 subscription. It's mission critical, the stability that supports Microsoft's premium valuation and reduces the downside risk. And then you get on gamers like me. Microsoft's gaming division generated $23.5 billion in 2025. Game Pass subscriptions and content grew by 8%, but hardware sales did fall by 6%. Now, the massive user base is roughly 500 million monthly active players across Microsoft platforms. The recurring revenue with Game Pass shifts gaming from one-off purchase to subscription, and the content moat like Call of Duty, Minecraft, Blizzard, King, some of the strongest IPs in the industry. But also because Microsoft is moving beyond consoles into cloud gaming and PC, which is allowing cross-platform strategy. Gaming isn't a core driver though of Microsoft's valuation, but it provides diversification, brand strength and long-term optionality, especially as the cloud gaming grows. But also because Microsoft financials are exceptional. The revenue at $281.7 billion grew by 14%. Net income at $101.83 grew by 15%. EPS is at 13.64, with the operating income at $128.53 billion. Now, the Q3 2026 highlights revenue was at $82.9 billion, which was up by 76.4 year over year. Net income is at 31.8, operating income at 38.4, and operating cash flow at 46.7. Now, of course, the balance sheet is quite good as well, with cash short-term investments at 78.3 billion, total assets at 694.2 billion, long-term debt at 31.4 billion, and shareholder equity at 414.4 billion, up from the 206.2 in 2023. So if you want to take that away, that is one of Microsoft's strongest balance sheets in corporate history. It can self-fund AI infrastructures, absorb market volatility, and continue returning capital to shareholders. The level of financial strength dramatically reduces the long-term risk. But why has the stock pulled back? Well, despite these exceptional fundamentals, Microsoft experienced one of its worst bumps since 2000. Now, that is mostly due to the heavy AI-related capital spending, the market rotation away from mega-cap tech, the short-term uncertainty around AI monetization, and layoff headlines creating sentiment drag. But none of these factors change the long-term trajectory. CapEx is rising because Microsoft is building infrastructure that will power the global AI for the next decade. This is investment, not deterioration. The pullback is sentiment-driven, not fundamentally driven. So what is the 52-week low opportunity that's here in front of us there? Well, there is an opportunity that lies in it. Microsoft revenue, profit, and cash flows are all rising. Its balance sheet is stronger than ever, and its AI strategy is accelerating. The Azure is gaining momentum, and Copilot is increasing. Yet, the stock has pulled back. But when the fundamentals strengthen while price weakens, disciplined investors pay attention. This is where the disconnects are rare, but historically they've been excellent long-term entry points for high-quality compounders. Now, Microsoft Future is built on AI and cloud infrastructure. The expansion from 95 billion to 283 billion massive AI data center build-out. The Azure consumption rising with every AI deployment. Enterprise AI partnerships are accelerating and strong revenue growths are expanding margins. Microsoft is laying the foundation for the next decade of AI-driven growth. These investments will compound over time, just like Azure did in the early 2010s. And with the financials that show the company with durability, profitability, the elite margins, and the powerful cash generations, I can't say there's no other than an absolute amazing opportunity in Microsoft. So what is my final verdict? Well, Microsoft's pullback is a rare moment where the price and fundamentals have temporarily disconnected, in my opinion. The company remains one of the strongest, most profitable, and most strategically positioned businesses in the world, and I'm definitely going to be adding this stock to my portfolio at the prices that they are now. It leads into cloud, enterprise software, development tools, and AI infrastructure that generates enormous cash flow, and continues to compound shareholder equity. For long-term investors, these are the moments you look for when sentiment creates a disconnect on a world-class compounder. And for me, this is why I just see there's no other opportunity to buy at these prices. Because if you miss out on this and it goes up and up and up, you're just going to be buying at highs and highs and highs. But then yet again, this is a company that I would buy even at a premium, because this company is shown in its past that it can deal with anything. But of course, this is not financial advice, but please do your own research, because I don't want you losing out on your money, because investing does contain a lot of risk and you could lose the money that you invest. But this is a company that I will be definitely added to my portfolio. But I hope you guys did enjoy this little breakdown. And if you did enjoy it, hit the subscribe button, leave a like, comment down below if you've already invested into Microsoft, and I'll see you on the next one. Goodbye.